Greetings, Dr. Jeffrey Scott here, and this is my Market MRI Pro update. Markets ease as large caps, some of the financials, Wells Fargo, Bank of America, JPM, and tech weigh on the markets. Today is Wednesday, January 14th, 2026. My email address is marketmripro@gmail.com, Google Group Top Down Trader, www.marketmripro.com. Thanks for joining me. As always, this should be considered educational, not investment advice. The intent of the video, as always, is to show you how I use my own tools. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in the report. Trading stocks and options should be considered risky. You should always consult with your financial advisors. And I've got tools in multiple platforms, but am an independent trader. Best way to keep in contact with me and know when I post videos, and apologize for forgetting to put the link in yesterday, is to join my Google group. It's called Top Down Trader. It doesn't commit you to anything except to get my emails. You can quit whenever you want. I use this as a mailing list. So if you have interest in top down trading, whether you have my tools or not, I don't care. I wish you buy mine, but you don't need to. You can still join. And in the remarks section below on YouTube and also on my Top Down Trader email, you're going to see a link for the mentoring session on January 31st. Know your news and earnings. So if we look at, we had the PPI today, and yeah, it did some. It didn't cause major disruption, although the markets were down before it came out. We had some Fed heads at the end of the day. And on Thursday, we got jobless claims, a bunch of Fed heads, and some manufacturing data. So still plenty of volatility coming. And then we got industrial production and more Feds on Friday. As far as earnings, tomorrow morning we get Morgan, Goldman, BlackRock, and we start to see some of the regional banks come in on Thursday and Friday. It is a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. I mentioned yesterday that I had puts on Bank of America. I had puts because from a cash investment, it was the largest position I owned, and I got to pay a bunch of taxes this year. Taxes are great to pay. It means you made money. And what I wanted to do was to protect that position. So I bought puts at the end of last week. I didn't pay much. So for example, for a 57.5 put, I paid $2.50 when the stock was just below it. Those are now worth $5. And like for example, today, Bank of America after earnings was down 82.40, and because of my puts, they were down, they were up 6,300. So I avoided 6,000 in losses. Probably won't keep those puts for very long. I'll take the cash. So you have to know when your earnings are coming. You have to be prepared. I like to protect myself, especially if it's a big part of my portfolio. For more information about software or how I trade or what I do, reach out to me at marketmripro@gmail.com. I did have somebody ask how come I don't show my trades, because you don't pay me to show my trades, and more importantly, you don't pay me to show you when I close the trades. There are plenty of smart people, including Matt Caruso, John Person, that manage money, and in their rooms, they share the trades they're taking. I don't have a room because I'm busy during the day running my company or my division of the company. Maybe when I retire, I'll think about that, but you can look at the charts. You could see the things that I picked. You can get a sense of what performance has been. I don't need to show you my trades. And oh, by the way, I do share my account with you from a perspective of performance. And if you have issues with the program, technology, getting it to load, coding at marketmripro.com is a good thing to go to. All right, let's go to charts. So Bitcoin up again, 3.5%. It's in a move. It's up 7.5 in the last 5 days. You could see volatility was up today. Russell led up 0.7, closing at the 92nd percentile. The rest were down, but they came back off their lows. 0.07 on the dollar, 0.07 on the diamonds, 0.51 on the spiders, and the Qs lagged the most, down 1.07. At 52 weeks, the new highs minus new lows remain strong, still 137 plus on the NYSE and plus 54 on the NASDAQ. If we look at the S&P sectors and we look at what's leading, I flipped it, sorry about that. You could see leadership in the market today was energy, staples, real estate, utilities, and healthcare. What do we call those? Defensive, defensive. Something concerning if you haven't followed the markets and followed some of the strength and rotated out of the cha-cha-cha, rah-rah-rah tech stocks. What was the laggards? Discretionary tech and communications, the exact things that led most of last year. So markets continue to rotate. As far as themes, uranium, copper miners, cannabis, metals and mining, biotech, oil exploration, um, blockchain, and MLPs were all up 1%. If you drop down a little bit, you'll continue to see ITA and data centers holding up fairly well. Participation was better today. 63% of the S&P 15 was higher, 55% of the NASDAQ, and 63% of the NYSE. There is a good chance that your personal portfolios did better today than the markets because the average stocks were up, yet the markets were down. All right, let's move on. Let's look at the timing model. Still in a buy on all four ETFs. Nothing has changed. Spider, Qs, Diamonds, and Russell, we remain in a buy on the weekly. And if we look at the dailies, we do see a change on the dailies as we went to a sell on the Qs. That is interesting, and that doesn't rewrite. So tomorrow there's still going to be a sell there. So we're still in an uptrend. Now we're getting a little bit more of a pullback, and the first one to start showing evidence of a breakdown are the Qs. That tells me be careful, and do I need to raise more cash? If I look at the index ETFs, I didn't say I need to go short because the main trend is still higher. Here is the S&P, the spider, and it did break down today. It's in sideways seasonality for a couple of days. It traded down into the 21-day EMA and bounced. Had a strong close, so even though it was down on the day and it was down 0.91, it really has not broken down. If we look at the Qs, we can see they've broken back down through that trend line support and traded down into the 50. Not beautiful, but it bounced. Not sure it's all over. I look at the diamonds. Diamonds traded down to the 21-day EMA, orderly. And if I look at the Russell, Russell closed higher with a bullish engulfing pattern. So not everything looks the same. We have clearly rotated into small caps here. So if you have a portfolio with no small caps, you took some heat. Now, I have mentioned last night, I don't like the fact that the VIX futures are marching higher, actually gapped higher today, and maybe had a little bit of a blow off. It came down and closed at the low of the session. So that'll be something that we need to watch. If that keeps going higher, concern goes up. If that was it, then maybe we have a rally. And we look at the dollar, and dollar's kind of consolidating after a major sell-off. I like to remind people where it came from. If we go into the commodities, talk about crazy good. Gold, all-time highs, closing highs, just trending higher, strong seasonality, a lot of place underneath the gap down, but gold is holding up okay. Will it fill those gaps? Silver, all-time highs, big gap up, closed at the high of the session. What's not to love? Coming up, you got 15 more points to 100. Oil got whipsawed today. It traded higher early, and then with some de-escalation, perhaps with Iran, oil came down some. So oil all over the place, but oil weakened some today, and oil was down 1.18%. Natural gas, another failure, broke down here and was down 9.54%. Hence, still dead to me. 10-year 10-year yields came down 0.70 down, and the 30-year yields also came down 0.68%. So except for the fact that Q broke down a bit, the signs still say we're going higher. That could change any time, but the risk is higher, and it's the kind of thing where I wouldn't blame anybody for lightening up and raising some profits. If I look at the buckets, you're going to see the buckets are still holding strong. No evidence of breakdown there, with no excessive buildup of stocks in any of these indices above the Bollinger Bands. If we look at the market briefing, you could see we hit all-time highs today on the NYSE and closing highs. Closed strong, and you can look over here at the NASDAQ. It's the opposite. It pulled back into the 50 and it bounced. Now I'm starting to think that we might be getting overbought on the NYSE, and that 50 is at a point where it's fallen before. So we better be careful on the NYSE because it is, like I said, getting overbought. So stocks above the moving averages up big, up some on the Nasdaq. NYS, the new high, new low, AD lines and up down volume are good on both. And we had another bango, which is exuberant buying. Exuberant buying at a top is not a bullish pattern. So it breeds a little bit concern. Are we getting close to a top on the Nasdaq? If I look at some more stuff, let's look at my favorite 13-week new high, new low. Let's highlight the last day. Oh, that was yesterday, though. Aren't we the 14th today? So we got 82, 84, 77, and 59. So we've burnt off any overheatedness on the short-term new high, new low. So I'm okay up here. Do I think we could pull back some more? Sure we can. But I don't think this is the end. I'm not calling for a crash yet. I think we'll have a lot more evidence if that's what's occurring. Now I want to look at my sector timing non-ratios, and I just want to look at what happens when I apply my timing model at the individual sectors. So Bitcoin's not a sector, but boy, look at those three white candles. Bitcoin remains very strong, albeit well off the highs. This is technology which seems to be weakening. Then comes discretionary, pull back to the moving averages, weakening. We have communications has broken down and is in a sell signal, weakening. And then we have this one, which is industrials, which is still very strong. Continuing on, we have financials weakening. We have energy showing some strength. Materials still strong, but it's got a bit of a shooting star. Real estate seems to be ready to break out. Utilities wants to break out. What is this one? Staples, look at that. That is a rotation to defensive posture. Not good for growth stock and bulls. Um, Healthcare actually rebounded, never really flipped to a sell signal. Bitcoin we started with. So it's an interesting market. Some things look good. Some things look like they need a little work to do. The other thing I like to look at are some of my favorite stocks, some of the big stocks. I look at these every night. Key stock timing. So one that I own is not performing well, which is Amazon. If it breaks down below there, I'm going to be out. Still up for the year on it, but not so much. Apple, I don't like buying below the moving averages, so I'm not chasing that thing down lower. Google, you know, candle doesn't look that bad today. A bit of a bottoming tail, close higher than it opened. It was down a little bit. I think Google still looks fine. Meta, starting to break down again, not fine. Netflix still stuck with arbitrage and whether it buys Warner Brothers or not. So these things are not strong. Tesla failed on the retest. And then Nvidia also broke below the moving averages. So I look at tech, I don't see a lot of strength. And here's Microsoft, which might as well be the weakest of the bunch, just continues to fall down. So Google looks okay, and I think the rest leave a little bit to learn. LABU had a massive day today. I take off a little bit at a time. So I still had some LABU. It helped juice my portfolio today. It was up quite a bit. that JP Morgan's almost over. I think tomorrow's the last day. Pharma held up well as well. Data centers holding up well. And ITA, frankly, is still holding up well. So I like to get a sense of what's working. I think I'm going to put more of my themes into that stock thing because I like what I see, the stock timing model. All right, just to show you that I like the ratio chart still, it's pretty clear what's working. Staples, energy, industrials, and I guess the next one on that bus, staples again, staples, materials, staples, and energy, and a little bit of industrials. And those sound like data centers to me. We're going to go with traditional approach today. We've got 36.97. Let's look at the Qs, Q, and we know the Q is not going to be strong. You can see the Qs squirting through the bottom. Let's look at the QQQJ, which I think is a fascinating symbol because it takes stock 101 to 200. And look at that, all-time highs. So we have rotated away from the big cap, maybe not necessarily away from tech, but we've rotated from the big cap tech. Now, if I go into the top, one other thing, let's look at Spider, breaking out and then pull back today. Let's look at RSP, the equal weight. All right, let's go into the top-down module. And we have the sectors, we have the industry groups. Let's just look at sector performance today. Well, there's four that stand out. Let's take a look at energy, defensive, and healthcare, three of the defensive plays. Let's then rank the various industries by performance: oil, gas, uranium, regulated electric, oil, coal. Notice there's no technology right now. Let's set a filter at $5 and 500,000 shares. Hit OK. Got 74 stocks. Let's look at the 5-day momentum. Let's just take a look at some of these. LabCorp looks really interesting here, and this may be my stock of the day. Why do I say that? Let me walk you through what I'm looking at. Seasonality looks positive. Predictive seasonality. How cool is that? We broke out today and took out the 21-day EMA, the 17 simple, and the 50 simple. Big move today. Lots of volume the last 2 days. Coming out of a squeeze with double momentum, and then we've got volume breakout, great relative strength in OBV and not extended. I like LabCorp. Let's see if I find anything I like even more. I'm a cancer doctor. I can't buy Philip Morris or anything that's got tobacco, but that looks pretty darn good. When does earnings come out? October 5th. Pays a 4.38% dividend. I just can't buy into that. MPC, Marathon Petroleum, Valero, the refiners are all chomping at the bits, especially those that can do the heavy crude out of Venezuela. U.S. Foods, nice move there. Had a double momentum signal and both an A plus and an A, I think, yesterday and carried through today. HCC, Warrior Metallurgical Coal, that looks like potential reversal. LEU, one of the most volatile nuclear plays in the business, and one that it's just hard to hold on to this thing. Now, why are we not getting it? I don't know. Let's go back to LEU. Look at the tails on these things. These things are huge. Low in 246 and highs around 318. Very hard to hold on to this. We participated in this move. Utility, Detroit Edison, first stock I ever bought because I lived in Detroit, and my mom used to always say, you leave the lights on like you own Detroit Edison. Paid about 3% dividend. It still does. BTU is coal. Breaking out here, let's look at some of the technical fundamentals. Going to make 8 cents versus last year 28. That sucks. Revenue, I don't know. Earnings are out February 5th. Chart looks great. I just don't know if it's got enough earnings power to continue going. CCJ, the big boy of uranium, I have a position in it. It's giving us a little flag. Might look good chance to get back in if you don't. And then I like IDACorp. I don't know what IDACorp does, so let's highlight it. Tells me generation, transmission, distribution, purchase, and sale. Okay. I wonder if they have anything to do with data centers, but they've had a beautiful breakout here. And what was their dividend? 1 point, whoops, 3%. So a nice breakout here. I like that one as well. Aklo, I talked about that yesterday. It's pulling back a bit. Um, right now, it's sort of not doing much. Budweiser, King of Beers, breaking out. Not my kind of stock. Cisco, also breaking out. So from a top-down perspective, I'd probably still go right back to LabCorp. And the way I trade these things, because they're heavily influenced by breakouts, the way I address it is I make it trade higher than it closed. Why? Because I don't want to buy it if it's dropping at the open. Let it trade into my buy stop, requiring a positive day. And I'll do some looks at LabCorp when I get off my calls. The other thing I like to do is I will go into the bottoms up approach and look at my 3 now favorite scans. We'll start with clearing that. Let's look at the A plus scan. To make the A plus scan, you have to have my double momentum signal. It requires other things like relative strength and OBV, and it requires a weekly to be bullish. It's not. That's the only thing I don't like about it. Apogee, nice run up, breaking out. Cardinal Health, I talk about Cardinal, McKesson, and Cencora as stocks to buy during turbulent times. Here is Cencora. I like this one more, buying it off the 50. I do own some, and I did sell companies to both of those two, but so I'm equally biased. CVE, nice breakout in this integrated oil. This is interesting and puts more credence on my LabCorp because DGX is a dual momentum play as well. Devon Energy, oil producer, kind of a junky looking chart. FE, a utility that I own, and I bought it with a married put. It makes a 4.29 or 4.24% dividend. It's holding up. Hormel, low in its pattern. J&J, one of my favorite pharmas, and I gave it to you back here. Is it time to buy it again? 252 coming in versus 204. That's 25% growth. It's got a PE of 21. It all depends on the surprise. NTR, Nutrient, I think this is fertilizer. Yep, nice breakout. PLD, nice uptrend. Actually, not a bad buy point. This is PLD is a REIT, 3.65. Ruckus is a biotech. Um, had a earnings are not to February 24th. Had a beautiful uptrend, broke down. Looks like it's getting ready to run. All of these have those double momentums. Rambus sitting in a squeeze, good relative strength at OBV, like that one. Callow, cheap energy play breaking out, and VIR Biotech. So I continue to think that I like LabCorp, I like Cencora, and if I didn't own FE already, kind of like FE, big dividend, not a lot of volatility if this market was to get dangerous. Um, the other ones I like the A trade, which requires a squeeze on either momentum or breakout. And you'll find, for example, if I look at that plus A plus, these are the stocks that hit both of them. So if we look at just the A's, you'll see another long list. And not going to go through them all right now. Uh, this is a stock that I've talked about before that had a nice day today. And, I bought the stock because the CEO is great. Doesn't mean it's going to work, but it had a nice day today. That's not insider trading. He's just a great guy, and he's been very successful. Celicity has a lung cancer drug coming to market, breaking out here. Expensive stock though, and it's got a squeeze and a mobile breakout. So there are a lot of nice stocks. I think I'm going to leave you right now and not give you 30 of them. I think it's okay to still play to the long side, but don't chase. And I like letting them come to me rather than buy them when they fall because they could keep on falling. Have a great session. Sign up for the mentoring in January 31st. And thanks for the kind words and wishes I got today about my mom. Thank you all.